Okay, yes, welcome to the weekend analysis. It is another day, so I'm going to share analysis on gold. So will be for the coming weekend. Actually, it is just a 5 days market projection. So basically, I do what to call the top-down analysis from the monthly time frame. Then I go deeper to 4-hour time frame, and I do the wave counts. I include the trend lines, support and resistance at the same time, and also I read candles. So make sure that you watch this analysis till the end, because I provide an exact direction in 4-hour time frame. So I'm in a monthly time frame, then I can go straight and see the highlight on the monthly time frame. So basically we see this monthly candle still have that rejection that I shared last week. So basically we have left with 13 days and 11 hours for this monthly candle to close. So in most cases, I expect the candle is going to close with this rejection, which is an indicator of presence of sellers at this level, because we are currently trading close to the to what we call the major resistance, or the highest resistance of all the time. So that's very, very important to look for how this candle is going to close. But basically, we can expect sellers who have been pushing price down from this level can do the same at the current price. So then quickly in weekly time frame, so we can see the highlight of the possible market move. So basically, the first thing in weekly time frame, now last week I talked about the engulfing thing, or the railway track. So we see this candle actually has rejection from the upside, but at the same time, if you see the bodies of those two candles, now they can form what we call the railway track. So in most cases, I was expecting that we will never see another candle that is going to close, or the next candle that's going to close above these two candles here. So that is what I'm looking for. So now what does this mean? Always I expected that the next candles here, they are going to move to the downside. So in this way, we expect the price is going to move down from this region. So now, since last week, we see the current weekly candle actually has formed a rejection to the upside and to the downside. This shows indecision between sellers and buyers, even though we see buyers at least did something. But in most cases, we can expect next week we will continue to the downside, so we can expect a bearish candle after this one. And at the same time, we see we have this trend line here. So our price was trading above the trend line several times, but now this weekly candle has managed at least to move below this trend line, so we can expect a continuation to the downside. But this trend line is clear in daily time frame. So that's powerful. And then quickly I go to daily time frame. And yes, now in daily time frame, what I see there, the first thing is just to have the engulfing thing here. And I said actually I don't expect, as I've said in a weekly time frame, I don't expect to see other candles moving above this price level. So in most cases, I expect a continuation to the downside. So that's powerful. And we see the trend line that I talked about in weekly time frame, so it's clear in daily time frame. And actually we see price already moving below. So the current movement to the upside is just a retest now for those who do the trend lines. So we see this is a retest. So in other ways, we don't expect our price to continue moving to the upside above this trend line. So that the projection. So now in the coming days, now from Monday, we can expect the price moving down from this region. And at the same time, we can have another engulfing thing around that. To this trend line, we see this trend line here. So we have this candle engulfing the previous one. Now this indicates that bearish momentum is building around this trend line. That is very, very powerful. And at the same time, now if I include the wave counts, now we can see now we had this ABC to the downside, and then price formed another ABC to the upside. So now in a long run, we can expect what we call a flat correction. A flat correction is expected, and it is a correction of this move to the upside. So we expect the price is going to complete with C of the flat to the downside. So in most cases, we are looking down in gold. So that is daily time frame. Then quickly in 4-hour time frame, in 4-hour time frame. So we see, as usual, the trend line is still there. So now this was the support several times. It supported the price. So currently it has been flipped into a resistance. So we expect this is going to hold it through. Price is not going to move again above this resistance level. So it will keep on pushing to the upside. To the downside. So this movement at this region is just a retest to that broken trend line. And also, if we go deeper or we go in detail at this region, also we can see a bearish engulfing. So if there's another engulfing candle here, so we don't expect the price to move beyond this level. So we can keep on selling from this region to the downside. So that is the main projection. So how are you going to trade next week? Now, in most cases, you can straight start selling from this region to the downside. So that's the projection with the stop loss above this region. So you can put your stop losses around the level of 2053. In any way, it depends on your risk, but you can just put stop loss above this recent swing high in a 4-hour time frame. And how far you are going to ride to the downside? Now you can start taking your profits maybe around the levels of 1983. Now those are the short targets, but we expect the price may go deeper. So you can have other targets now around the levels of 1933 or 1935 in any way. So we are going to keep on riding to the downside in the next month. Is actually expect this move to the downside is going to hold for too long. So that's the projection. So thank you for your time. Make sure that you like this video. If you have any comment, write in the comment section. If you have any suggestion, addition in any way, you can put it in the comment section.